Hey everyone, I'm Mickey. Welcome back to LaceUp Solutions, your #1 DSD software. Today I wanted to take a moment on the whiteboard to show you all how to calculate gross profit. A lot of the customers that I work with have a difficulty understanding the differences between gross profit and net profit. Today I'm going to tell you what is gross profit, how to calculate gross profit, how to calculate gross profit percentage, and the differences between gross profit and net profit. Either way, let's get right into it. So what is gross profit? Gross profit is something that's super simple to calculate. So gross profit equals, let's call gross profit GP, equals your revenue minus your costs. Okay? Now it's important to understand this is the revenue generated by the item that you're thinking about. So if we're considering tortilla chips, for instance, okay, we would only be looking at the revenue generated by the tortilla chips and the costs associated with making the tortilla chips. But it's important to understand these costs are your cost of goods sold, or COGS. The cost of goods sold are the costs of the raw goods that went into the tortilla chips. Okay? So let's take a real simple example. Let's say that you sold $1 million of tortilla chips. So if we go here, our revenue is $1 million. Okay? Let's say that the costs of the raw goods that went into those tortilla chips was $450,000. So my cost of goods sold is $450,000. Okay? 1 million minus 450,000 equals 550,000. Okay? So my gross profit is $1 million minus 450,000 equals 550,000. That's my gross profit. Now to calculate gross profit margin, it's super simple. You're just going to go your gross profit, let's say gross profit margin equals your gross profit over your total revenue, which equals, what do we have for gross profit? 550,000 divided by $1 million. So that's going to give me roughly 0.55. So if this equals 0.55, obviously we're calculating a percentage, so we want to multiply this times 100, and that's going to give us a 55% profit margin. Okay, so what does a 55% gross profit margin mean? A 55% gross profit margin means that for every $1 you sell, you're making 55% gross profit. Okay? Now, this is very important. This is critical to your understanding of gross profit versus net profit, because this 55% is on the product itself, on the raw goods that went into the product versus the finished good, what you sold it for. The difference between those two is this gross profit margin. That does not take into account employee expenses. That does not take into account the cost of your power bill, the cost of your manufacturing plant. It doesn't take into account any of that. That is the difference between gross profit and net profit. This allows you to calculate what the gross profit is of your finished good. Okay? It does not allow you to calculate the net profit of your entire business. For that, we're going to cover it in another tutorial. Either way, let's do one more quick review. Gross profit equals revenue minus costs. And remember, the costs aren't the cost of your manufacturing plant or of your employees, but it's the cost of goods sold. So it's the cost that went into making the final or a finished good. So in this example, we had a revenue of $1 million. We had a cost of goods sold of $450,000, and we had a gross profit of $550,000. Then we calculated our gross profit margin. Our gross profit margin equals the gross profit divided by the total revenue. So $550,000 divided by 1 million. That gave us 0.55. Then we multiplied by 100 because it's a percentage, and we got our gross profit margin. That's 55%. Anyways, I hope that this video helped you all understand gross profit and gross profit margin. Please comment down below if you have any questions. I'll make sure to get back to you personally. My responsibility is to provide massive value to you and to make one piece of content every day that's going to help your distribution business. Either way, I look forward to seeing you guys next time. Take care.